Hello, ladies and gentlemen, and welcome back. Well, trillions of dollars are at stake over the next 24 hours as the market does battle with one of the biggest options expirations we've ever seen. On top of that, we know we rejected the trend line, the 200-day simple moving average, the 61.8 fib, and the trend line that stopped every single market in its tracks during 2022 has worked again. The question now becomes are we seeing similarities between some of the bigger crashes of 22 and right now? Well, the good news for bears is that not only are we seeing certain similarities, but we've also got, after this expiration of trillions of dollars, not as many puts as many people would believe underneath this market. So could it bring a collapse? Today we discuss stocks, commodities, and cryptos moving forward. Well, welcome back everyone to the Daily Show here. We're talking about the news, the macro, the lead indicators, and the key levels that you need to be watching in the markets over the coming weeks. But let's begin with the news stories of note. Netflix, well, the stock leapt after hours, did pretty good day. Subscriber success, 7.7 million. And on top of that, it looks like they're going to stop those pesky password sharers. I'm sure there's a few of you in the comments section that have been doing that. We'll find out whether that works. But like Meta, Netflix and Meta have both risen from the bottom, and they've been doing pretty well recently. That doesn't mean, though, that we've kicked off amazing earnings season. We've got Tesla next week, and then the big tech stocks coming. So a lot of people are talking about the US debt ceiling, and supposedly the articles are saying it's worrying the market. Look, we've already kind of fixed that problem for temporary using extraordinary measures, thanks to Yellen. Yes, unfortunately or fortunately, the US has kind of fixed the problem for now, and it looks like these extraordinary measures will be only exhausted before early June. So we'll find out how that basically works. Realistically, the only thing I'm looking for here, like most people will be, is similar to after the GFC, a debt downgrade on the US. If that happens, last time this occurred, I think the market moved between 5 and 7% down. So yes, debt downgrades will be probably the big discussion of the debt ceiling. I think we all know they're going to have to raise it. It's ridiculous. It's out of control. But this is the world that we live in right now. Now, if you actually didn't know this already, the debt ceiling has been raised 89 times. I shared this over on Twitter. Follow at FX Evolution. We share a lot of great charts over there, including some of our technical charts we'll be talking about later on. But take a look at this one. Pretty much for the last 30 years, that was the one that maybe that's the straw that broke the camel's back. That was a massive debt ceiling increase. And then since then, it's just been on the up and up and up. And of course, interest repayments are becoming very burdensome on the economy. Let's have a look at smart money versus dumb money confidence. We've been talking about this one recently because it was one of the signals or one of the ways that helped us to define that we were probably going into a very large decline during 2022. Well, again, we actually hit a 1 or 500-day plus high that we reported on during this 4,000 level. As we were testing the 4,000 level, it looked like dumb money inflow, that's us, by the way, the retail traders, it continued to spike up. People were positioning for a breakout. And as that was increasing, then basically the smart money was doing absolutely nothing whatsoever. And then, of course, they dropped the market straight into this maximum pain week, this big options week. We see the big downturn. Could this be the beginning of this? We've got some discussion points we want to bring up in today's show around that. But let's discuss some of the big players. What are Goldman saying? Well, Goldman is saying in soft landing scenario, we basically would be looking at double bottoming. That is coming back down to where we hit the lows during 2022, and we'll hit them again in 23 and then look for a spike. The other thing Goldman says is if we have a hard landing, that's where not everything's working out the way that it should be with this inflation story, then we might be going down to wipe off everything after basically the pandemic, the highs that were made past that huge Fed stimulus. This is one of the favored kind of lows that most people talk about, between 32.50 and 31.50. Could it happen? Of course it could. Are we going into a soft landing? Look, that's a perfect scenario. I would actually prefer a soft landing than a hard landing. I just think it's better for all of our family members out there if that occurs. But many of you would disagree and say, bring the hard landing. It's time to reset the system. We'll find out. Of course, 31.50, 32.50 is certainly a great target to keep in the back of your mind and to bring into your analysis in 2023. So what could stop this? Well, there has been a really great stat, and we call it basically the trifecta here, which is the Santa Claus rally, which we did end up getting 1.4% in 2023. And that's usually after Christmas into the first couple of trade days of the year. The first 5 trade days of the year, which end up being positive, and January returns. Now, this is where things get really interesting because we're still positive for January returns. But after the 20th expiration, which we're on right now, there are not as many puts in the system. So could that open up negativity for January? And then, of course, wreck on this stat. I tell you what, it's pretty compelling when you think about it. The 4 things, including the negative previous year, lead to pretty much 100% of the time being positive. So it's an interesting stat, certainly one that we are sharing. We also know that another thing that you'll want to be looking at here is not so much your opinion on the earnings of the market, but more importantly, the forward PE expectations as a whole. I'll be sharing this throughout 2023, so make sure to subscribe here on YouTube for this because this is going to be the one to watch. It helps you get into markets. It helps you buy potentially fearful situations. And obviously, you've got to make your own decisions, but it is a great indicator along with many others that we'll be sharing here. Of course, VIX 45 plus, that'd be another fantastic potential bottom low being put in. Let's talk about this chart here, inflows, money flow in general. Well, we've seen an interesting 24 hours, but nothing really of note. Obviously, solar and clean energy were the biggest decliners. We saw a risk off on the last 24 hours and really the last 48 hours of trade. And these have been some of the best performers over 2023 so far. No super moves into defensives. In fact, if we look at the last 5 days of trade, look at this. Utilities, staples, and even healthcare are some of the lowest performing over that period of time. So yeah, big shifts here in the markets. Again, there are basically huge things going on underneath the hood. And as we enter through the biggest earnings periods, which over the next couple of weeks, we will literally be seeing the vast majority of S&P 500 market size coming out, we'll know a lot more about what this market wants to do. We've seen Netflix. We move forward now pretty much into next week where we've started to get those Teslas coming out and some other large companies. We will update these charts, but make sure you're aware of the earnings coming out. It's going to be super important and something we'll need to be paying attention to. Just before we jump into the charts and we look at the key levels that you need to be watching right now, I'd like to say a big thank you to the sponsor of today's video, which is obviously Tiger Brokers over here. Now, for any of our Australian audience or New Zealand or even Hong Kong now, US and others, Tiger Brokers does have an option for you. And of course, they've got some special offers in the description down below. Now, if you're lucky enough to be from Australia, you can also get 90 days of free brokerage, free in-depth market data on both the US and the ASX, fractional shares, including maybe some Buffett share, Apple, Microsoft, Google. Hey, I wouldn't mind having some of those, including Tesla at these lower points. And you get a free additional ANZ stock if you sign up through, of course, the FX Evolution community link. Now, I always like to feature something on the platform, and I think this is one that we talk about all the time, money flow. Now, Tiger Brokers, here's the desktop platform. They've also got a great application on your phone. But one of the things I like is taking a look at what's been performing so far this year. And what you'll notice is it was retail trader styles, Alibaba concept, NFT concept, solid state batteries, copper, cruise concepts. So it was basically China reopening stories and realistically hyper growth stocks. We've shared on Twitter actually another one of these, and it had like Wall Street Bet stuff. It had Squeeze or SPACs. There were a whole bunch of 2020, 2021 sectors performing the best. And what that told us is that effectively dumb money or retail money was probably the thing pumping the market at the start of this year. And it does open up this real story of potential negativity coming through later. So we'll have a look at the charts, but it's always great to see your year-to-date performance of different sectors. And of course, it's awesome to see the weaker ones as well, because there could be opportunity of flow into those. Make sure you've got a broker like Tiger to be able to get access to things like this. So let's jump into the charts now and take a look at the key levels. We'll start off with the VIX. Now, we mentioned before that we love forward PE as an opportunity to potentially find value in the markets. Another thing that I like is, of course, the VIX, the fear index. It's becoming, I think, less useful each year because of the way options are now moving towards daily options. But realistically, we're looking towards the VIX potentially spiking a 45 plus in 2023. If that happens, it's certainly something that you usually coincide with effectively the end of a downward market and potentially the beginning maximum fear. You can see through history, this is something that has happened quite a lot. It won't pinpoint the bottom, but it's certainly one of the reasons. And remember, you want at least between 4 to even 10 reasons that you can interchange with getting into markets and trying to pick lows. Breadth and thrust theoretically are as well, but as we've seen many times, they have given us false signals. And I believe it's the sneaky algorithms of Wall Street and the composite man that are working very hard to try to convince people. And that's what bear markets are good at, convincing people to get into rallies. You can't discount them, but you've got to have quite a few reasons before you pull the trigger for the longer term. Let's talk about TLT. Speaking of longer term, bonds continuing to do quite well. Of course, the Bank of Japan stood pat. They basically said, we're not doing anything for now. Effectively, that tells us that the Bank of Japan current chairman is getting kicked out. We already know that. And I think that's happening in April. Nothing will probably be done before then, but the market is certainly expecting that after that point, we're going to see policy change shift. Now, TLT does well if there is no shift, because at the moment, people in Japan send money overseas, and specifically, they've been investing in treasuries. That's a well-known fact. It's been part of the treasury story now for over a decade. So we're seeing some pretty strong signs here on TLT, but again, we've hit that resistance. I wouldn't mind TLT to trade within a band for a while, but I still think this is going to be one of the better investments, theoretically anyway, for 2023. And it really just comes down to the price you get it at. We loved it a few weeks ago. We liked it down here. We obviously wished it was here, but at this stage, it's a little bit high, and you can see that on the charts. Not really any signals. If it does open to the gap downside though, be prepared for further selling, because this could be a little island reversal. And funnily enough, we're talking about island reversals for the S&P 500 a little bit later on. Now, copper, this is the story of China, I believe. Reopening of China has absolutely spiked metals. We've also got this potential stagflation story, and we know stimulus is coming in. Now, copper hit a critical level. I cannot state this enough on how important copper and this level around here is going to be. Between the 4.3 and the 4.6, leading into Chinese New Year, which is the start, kicks off this weekend, we have seen incredible spiking of copper. Oftentimes after Chinese New Year, we see metals going down. Are we seeing a peak in metals and a peak of this story in inflow? There are some signs of that. If you have a look through maybe things like the CQQQ, you can see the resistances here. If you load up something like the Hong Kong 50, you can also see that it's around resistances. So we're at critical points. And I think, when you're seeing a 40-50% hike in only a few weeks, this makes you think, well, maybe it's best to have some, let's say, some patience here and wait for the next story. So certainly the metals looking like those particular ones have jumped around their premium highs. Let's move over to the DXY. We talked about this take of the low being quite a bullish signal for us. Last 24 hours played out pretty well for this story. So basically we saw a small pullback on that, and that's exactly kind of what we wanted. Now we want to see a ramp, and I've got an alert set above 102.70. And if that occurs, could this be a Wyckoff accumulation? We'll tailor it with the euro in a second, but I'm not too sure if this is going to stop the market to sell back down if this is accumulation. So watch this space at the moment. There are a lot of retail traders trying to do this, but we're about to hit the alert on the euro as well, looking towards that kind of 45-50 zone. We've seen rejections. We know where the squeeze will be in. I mean, if the market gets above 108.90 again, it's going to be a brutal squeeze, you would think, on markets here. But we've got a lot of rejections. Most people can see this. There's a lot of shorting trying to go on. If it's going to short, if the DXY is going to long, it's within, you would think, this next point, kind of 1 to 0.4% move. So certainly a critical level here towards the shorts. If anyone got the long in the euro pre-London as well, congratulations. That was an excellent trade moving in to the New York session. It was really good. Let's move over to something that is squeezing, and that's gold. We still have no signs of weakness here. We obviously hit the demand that we talked about on the channel this week, and it's made a new high. And more importantly, it made a new high and it closed. So it's closed above the wicks. It looks like there could be further squeeze for gold. And this is becoming just really that spread of the idea. I think this is a party. And what that means is that when it's not that gold's probably even worth this price right now. Maybe it's worth more. I don't know. But it's had an amazing run on it. Now, gold tends to get hyper at these periods of time. And sometimes it has really large spikes as more and more people find out about the gold run and the news spreads throughout the world. Gold does tend to have these mass rallies on it, mass hysteria, and then it can float off. And while I'm a bullish gold player, I also think that you've got to understand playing it into Chinese New Year and then potentially after Chinese New Year seeing it weaken is a seasonality trait of this particular metal. It's gone amazingly. It's running great. No signs of weakness yet. But we will be the first to talk about it here on the channel should we see signs of it. Very strong move, though, in the last 24 hours. And if DXY fails us and makes the new low, geez, gold could continue to ramp well over, you would think actually upwards of about $2,000 an ounce at this stage. I do have long-term plans for gold. I've always said that. I'm definitely thinking the stagflation or even deflationary bust kind of is pretty good for gold. But I do think the run is starting to get a little bit heated. Too many people talking about it. Let's move on to oil. Nice 24 hours here for oil. It dropped off as we talked about. Now we're seeing it rally. I've got an alert set above 82.50. It's going to be a critical zone for oil. If it does breach out from there, could this have all been an accumulation base towards $90 plus? I think that's partly due to the China story, but also look at that. I mean, it's becoming a pretty nice base. So what happens very, very soon is going to show us whether we can eventually get that 65 or whether my new suspicions are correct and we end up moving towards 90. I'll keep updating everyone on the channel as we see that go. Let's move over to Tesla. Now, Tesla's weekly. I want to bring this up. What if it closes like this with a big rejection? We've been talking about Tesla and, of course, the chance of the dead cat bounce or that quick rally. It had a quick rally. Is it this the low bottom? Well, we know there were tons of puts here. We also know that all of them are going to lose their money, and that was highly likely. What happens next, though? We've got earnings coming up, and we know that we're potentially going to put this rejection wick in. Look at the daily, the doji. Look at the 2 hour stuck within the expected options ranges for this week, which I've updated to 130 and 123. And I'm pretty comfortable with it sitting within this zone for expiration because we've been tracking it all week. We knew the puts were there. We knew that the puts on 120 were becoming larger. And we also knew that 130 and 135 were starting to stack up. Max Payne's 130. I guess that limits or gives a little bit of range to the upside over the Friday session if you believe in Max Payne. 3.5 almost million units, a lot of units, and unfortunately a lot of retail traders, people that maybe aren't watching this channel and understanding this better, are getting destroyed. I mean, what's happening up here? Who are these people? I don't know, but unfortunately they're going to lose their positions and they're only a 1 day away. Now, as we scroll through though, and you look at the 27th, what you'll notice is we go down a lot. Open interest amount 426. And yes, we've got calls and puts and Max Payne, but this is a totally different scenario. 426 versus 3.5 million. I know which one I'd rather manipulate if I was Wall Street, and it wouldn't be that one. Let's move over to Netflix. As we mentioned, after hours, it was up. It basically was making pretty much new highs back on this resistance, which is where we got the gap fill. I don't know if I'm loving Netflix here anymore. I mean, beautiful base, beautiful, breakouts and everything that's happened. But Netflix is probably at what you would call fair value at the moment in the current market conditions. Nice level, beautiful fill. And even though it's moved back up, it's right around those key zones. So congrats, I guess, if you're in it. At this stage, though, nothing to report. I just wanted to bring it up on a chart. Piton, I wanted to mention why you want to trade obscure events if you know what you're doing. This was, I think, an 8 of 9 day run up. Well, that's unusual. And when you see hype like that, usually bad things are about to occur. In the last 2 days, Piton has wiped from the top to the low here, 16.11%. It kind of looks like the current rally for these stocks could be over. I wouldn't be surprised at all to get rallies, but then for those rallies to be met by sell demand. So we'll keep watching Piton and other hyper stocks. But yes, unusual events lead to potential opportunity. And that's what we wanted to show there. Speaking of unusual events, we've got a supposed recession in the world, but at the same time, we've got the UK FTSE almost making new highs. As we know, many people would see this as a potential of a false breakout. We don't know that yet, but we'll be watching it, and we've got to set alerts underneath levels. So I'm going to set an alert here for 7.3. We will come back to the FTSE. Let's have a look at the DAX quickly here. Again, you can see the small rejection on the DAX. Critical level for the DAX to stop. It's been heavily shorted by retail traders. It's in the zone where if it's going to turn, it needs to go down now, because so much of the world is getting close to making new highs or getting up there again. And that's pointing towards, again, that recovery story. We're not seeing it in the US, but yeah, so much of the world's absolutely going ballistic. Let's move over to the Russell 2000. Now, this stock market hit that critical high and rejected. We know where the bulls are going to be in control. If they get a closure above this like 1900 zone, it's going to be significant for them in the future with the base, with everything that's going on. We don't know that yet. Obviously, it's rejected down. I wanted to point it out though, because I think it's an important chart. Let's move over to the US 100. Now, if we have a look at this on a weekly, what you'll notice is that they rejected that downward trend line that we've had. And also this is the Nasdaq downward trend line, and it hit that golden pocket, the 61.8 fib. We also see that rejection wick and the way it wicked. And I think that's important. This trapped retail traders into longs and then squeezed them out. Then we come down to this demand zone and we find buyers. Let's talk about the next 24 hours and use the 15-minute chart. So I think I like the idea that there's a rally here. I'm in two minds whether we do end up getting another false breaking out and then rally into the Friday expiration. It's a tough one. But we have seen kind of that low pushing in here, and we've seen like a high that's taken out that area. Now, we're not above 1420 yet, but I am playing with the concept here of a rally in the Nasdaq for now, because this was such an aggressive sell-off. And maybe it's time for us to fill some of that and then move back down later. And we'll talk about the down later when we look at the S&P 500. But I think 1410 is going to be an important level, or 1420, and we'll set an alert there for that for the Friday, and we'll also set an alert for these lows just in case they're hit, because the way that the market will interact with this zone is going to be very important should it be reached. At the time of this recording though, you'd be playing the shorter time frame, bullish side, at least from the technical charts. Of course, it's all potential. You practice your own risk, but there are some nice signs of the setup over the last 24 hours. Now, this is where things get pretty interesting. We had the expected moves for the S&P 500 on the chart here. You'll notice also we knew this was a significant demand zone. It hit the expected weekly options low and then ramped back up. But more importantly, have a look at this. Gap up, gap down. What is this? Similar to over here, could this be an island reversal? Now, it is basically. I mean, that's what it is technically. The question is, will it end up being a superior island reversal? It's all stats. It's all, numbers at the end of the day. But this certainly is a negative signal for the markets. And when you have a look at it here with the SPX, if we're putting together some of the signs, if we do get recovery, you've got to kind of feel like there's that real potential of the markets to go lower. And we'll talk about that when we look at the options. But again, island reversal. We've had a few of these types of things off these highs, and it's a significant thing to be taken into consideration. We also know that we have a 3750 and a 3580 unfilled gap. Now, remember, in Goldman Sachs terms, they were claiming that the market would come down here and then do this during the soft landing scenario. That's like the perfect scenario. So they've been claiming that we've got unfilled gaps. Now, we don't necessarily say, oh, wow, they're the gospel and they know what's up. We do know that if we make a new high here, we should be going towards these unfilled gaps, and certainly things change massively there, and we have to absolutely completely reverse our thought process. But for now, the evidence is weighing better for the bears than the bulls. And yes, we had the thrust and the breadth, but we know that's faked us out in 2022. We talked about it here. We love the stats, but the stats were not helping us so much during 2022, were they? So let's move over here to the US 500. So through the bodies, theoretically, we've got a trend line underneath here. We also know that we have some interesting interactions with the market that have gone on so far. So I always like using the S&P 500 more so than the Nasdaq or others. We made a low, so we kind of rallied through the session. Probably took a lot of stop losses that were here from retail traders, so that was pretty successful for the move. Then we rallied above, and if you notice, there was a lot of wick rejections in here. So when we rallied above, I feel like that was relatively significant. 39.30, that would be a pretty nice move above if it does happen. And again, we hit things like the daily level. Now, I was theorizing that we might even make it all the way down to here, take the low, and then spike up if we hadn't stopped at 39.20. We did come down. We've now gone a little bit more up. It's still possible for this to happen, but I like the idea of a little bit of a rally here into a fall in the next weeks. And let's have a look at the options around that. Let's look at also the daily close. We'll go back to the SPX here just to show the daily close. So the previous session we closed on the low. This session we had a little bit of wick buying showing us there was some demand at the end of the day. That is some evidence towards showing us that buyers are trying to keep it above the 390. Now, why would they try to do such a thing? Well, of course, it's money. It's Wall Street after all. That's what they want. They want the cash. And that's what they're looking for. 5.3, almost 5 million units. That's a hell of a lot. And they've got 390 puts, 390 calls, and of course, 400 calls, which probably sad face are going to lose their money by the end of the week. Even if it went above 400 now, there's a lot of burn of time. So yeah, it just shows you again, watching these levels, super important. So people are going to focus on the max pain. I'm not going to focus so much on the max pain and hitting that level perfectly, as we know that, yeah, sometimes it hits it, but realistically, this is the week. Most of the time, I'm looking at the gap, at the kind of ranges. So 390 to 400 is a pretty decent range. And if the market does rally up, it gets above 390. That's cool. Very nice for them. And then maybe gets up there to that 395 kind of area. Even if we close there, would that be great for Wall Street players? Absolutely, it would. Let's now move forward, though, to the 27th. 5.3, remember, million. All of a sudden, whoa, 774. We only have 380s, 375s. But look at the unit size. It's so much lower. I don't know what these are. Who knows what they are? 325s. Probably not going to make any money, but see how we open up the possibility of shorting in the January period. If we move forward to the February period, we still don't have huge amounts. It may look like they're big, but these are actually quite small amounts, 540K there. So there's a real opportunity for, if the bears are going to take control, taking control after this week, maybe that island reversal, actually putting in the work and pushing us to the down low. And then we get some very interesting levels. But if it waits too long, by the 17th, the next third options expiration, all of a sudden we've got 3.3 million units, and we have a significant amount of units suddenly sitting at 380. So does that mean that whatever is happening here is short-lived and gets that bounce similar to a Goldman Sachs style? Very interesting stuff. Follow along, subscribe to the channel if you're interested in this stuff. We will be following it quite closely over the next coming weeks. Let's move over to Bitcoin. It's come up to what I would call a semi-little resistance here. We didn't make the new low, which is under 20,250. I would have liked that, then rallied, then looked towards the sell. At this stage, we're at what we would call basically small critical resistance. We're obviously not new breakout highs, but we're clearly in whatever this is. Is it accumulation or distribution? We don't know yet. It is a coiling market. So usually when you get a breakout, you're going to get a big move. So Bitcoin, precipice, very important. Can we get any ideas from Ethereum? Again, at one of our resistance zones that we've talked about. The candles are showing us maybe it's bearish, but if we get alerts above these wicks and it doesn't instantly reject, well, you can tell that that's probably all part of an accumulation towards a squeeze. And then you move towards the things like 1,800 or even 2,000 for Ethereum, and of course, Bitcoin would be moving up. Critical times for these markets and big levels. Is there any news for the week ahead? Not really. We don't have too much other than all of the central bank people coming out and telling us how great they are and how they're going to fix the economy. Then we move into Chinese New Year. And remember, that means bank holidays for China. Often we see a lowering of liquidity over these periods. and some shenanigans going on in certain markets. Even crypto has its own kind of, way it trades around Chinese New Year. So if you're interested in following us next week, make sure to subscribe, smash that like button, and also check out Tiger Brokers today. Links in the description down below if you're interested. We do also have a special promotion where we're giving away almost $10,000 worth of courses to people that sign up with Tiger Brokers. And all you've got to do is sign up, fund with as little as 1 cent, and you go in that draw. The details, again, in the description. Thanks so much, guys. See you in the next one.